What is up everyone, Nick here, and in today's video I'm going to be discussing the ramifications of a Democratic presidential win, the upcoming potential of NIO power and battery as a service, why this will help NIO dominate and potentially obtain a pole position within mainland China, NIO's plans to rapidly expand into the European and North American arenas, NIO's new 100 kilowatt per hour battery, and a potential short-term correction coming in the following weeks. We have a ton of crucial updates to get to. I'll be analyzing their figures prior to their third quarter's earnings release in the coming weeks, so buckle up and let's get after it. If you haven't already, hit that subscribe button. I do a ton of videos like this, analyzing EV stocks, tech stocks, IPOs, and centralize my focus on disruptor companies that are well positioned for the future. While you're down there clicking things, absolutely decimate that like button. These videos take quite a bit of time and effort to put together. It really helps out with the YouTube algorithm, and more importantly, I'd really appreciate it. I have a ton of interesting videos in the pipeline. You don't want to miss any of those. Anyways, without further ado, let's get right into it. So we are all probably aware by now that Joe Biden has been elected the 46th president of the United States, and with that comes a changing of parties, policies, and more importantly for us, a completely different mindset in terms of climate change and sustainability. Diluting this thinking down, we arrive at a consensus that electric vehicles will be favored and pushed by the United States in the coming 4 years, which will also have ramifications on other nations such as China. Joe Biden has had a firm stance on supporting electric vehicles and cracking down on legacy brands with high emissions. Biden is expected to bring back many states' zero-emissions vehicle policy and subsidy programs on purchasing electric vehicles. Although this policy is obviously instated within the US, we will see that these policies will help out sales of electric vehicles worldwide. As they increase in popularity, they essentially ease the mass public's mindset on the affordability and possibility of a fully electric vehicle fleet, which will be the future. Democratic policy is also expected to increase the quantity of charging stations nationwide, which is very good news for electric vehicle companies and their investors. NIO does indeed have plans of expanding into Europe next year and into the United States by 2022, and the shift in fundamental thinking and legislation will make it a much smoother transition period. Tesla currently has very few legitimate competitors in the United States when compared to the fierce rivalry within China. And I believe this new government will ease some of this competitive tension as companies will be able to expand to a more broad geographic region with more incentives. Going to NIO's share price, we see an intense 5-day trading week with over a 22% gain in 1 week alone. Much of this was due to the potential of a Democratic win, which translated to gains in virtually every single zero-emission and electric vehicle company across the board. But will we see a substantial pullback in the coming weeks? Much of the share price increase was also due to the expected phenomenal third quarter's earnings NIO is set to post on November 17th. They are expected to have increased their vehicle margins and their gross profit margins by a substantial quantity, and from their October delivery numbers continuing to increase, their November deliveries are expected to increase as well month over month. There is a bulging of auto sales within China in the latter half of the year, which typically climaxes in November, which is also expected to greatly increase NIO's delivery numbers in the month. All of these factors are accumulating into the amazing trading week we saw last week and could very well continue into the next week leading up to their Q3. Li Bin, NIO's CEO and founder, has publicly stated in an interview with Bloomberg Business that NIO had run into supply chain issues in the summer months. However, much of that has been resolved and their supply chain is finally catching up to their demand. I will have a full Q3 breakdown and what to expect leading into this all-important date, so make sure to subscribe, you don't want to miss that. Li Bin was hinting at the fact that an increase to deliveries in the coming months should be predicted, and with that, an increase in their gross margins. We can expect very favorable results on their earnings. However, with any large surge in share price, we typically see a correction and profit taking occur in the following weeks. However, with NIO's expected huge Q3 to take place just 9 days from now, I would not be surprised to see somewhat steady and predictable build-up leading into this. I do not think by any means that a share price hovering around at least $50 into their Q3 is out of the question whatsoever. However, this would be short-term overvalued, and ensuing sharp correction could very well take place in the days immediately following the 17th. Shifting gears into NIO Power. NIO Power remains a catalyst many investors overlooked early on in NIO's business life. The forward-thinking and revolutionary management team had foreseen massive potential for building a coherent and strategic battery swapping station infrastructure within mainland China. NIO went billions of dollars into the red building this fleet of charging stations before their company was even remotely profitable or fully operational, showing the intense risk and the belief management had in their young company. These stations may now change the way NIO operates and how NIO Power could become an ever-increasingly larger portion of NIO's total earnings. These stations, scattered strategically around China, many predict may very well become stations that other companies model their own vehicle batteries around, so that their company's vehicles could also use these swapping stations, leaving NIO receiving a small percentage of every single payment. Currently, NIO Power makes up but a fraction of NIO's total earnings, but in the coming years and quarters, as more and more NIOs and possibly other vehicles use these stations to swap batteries, this could become a much larger player on NIO's bottom line. NIO on November 6th released news that they have successfully completed a 100 kilowatt per hour battery. This is a massive accomplishment for the company and further proves and facilitates that a coming total global electric vehicle fleet is possible. NIO in the past few quarters has been rapidly gaining investor capital and putting it right back into their company in terms of research and development. They see huge potential upside in continually upgrading their batteries while making them ever increasingly more affordable. Their new batteries, utilizing cell-to-pack technology, accounts for a 37% higher energy density, considerably lowering the battery's overall weight. NIOs can now obtain ranges of over 600 kilometers, 615 to be exact. They accomplish this through improved thermal encapsulation, improving space utilization, smart parameter adjustments, and all climate thermal management. This is incredibly important and necessary in terms of NIO making a name for themselves on the global stage and gaining a foothold within the EV industry. Consumers typically state their main deterrent from EV is inconvenience and range anxiety, the fear of running out of battery charge away from a charging station and being essentially stranded. NIO is actively mitigating these fears by implementing higher density batteries, having a comprehensive charging station network, and beginning a program of NIO Power van fleets that will come to your rescue and charge your vehicle if you do run into the unfortunate and unlikely event of fully running out of charge. They are simultaneously lowering the barrier to entry point through their battery as a service program, which allows consumers to rent their batteries, which are the most cost-heavy portion of the vehicle, while allowing the consumer to own the shell of the vehicle, the body. In this, consumers are able to save thousands of dollars on purchasing their vehicles, and with the added incentive that the heartbeat of the vehicle, the battery, can be swapped out, upgraded, downgraded, rented, or bought at any point at one of these charging stations. Because of this, NIOs are inherently able to elevate their reselling price much higher than competitors lacking swappable batteries. This will boast incredibly well for NIO in the coming landscape. They are really positioning themselves to become a behemoth in the electric vehicle industry in China and globally. They have made so many incredible business decisions in the past few months, and I could not be more excited for this company moving forward. It's for these macro reasons that I don't think investors need worry about this short-term volatility. Consider the big picture while investing. Think about where this company could be in 5-10 years down the road, and you'll notice that the short-term swings become much less worrisome. That being said, if you are looking for a nice entry point, I would consider purchasing on a dip date leading into their Q3, as virtually everything may change after this Q3 earnings, and we may never see these low share prices again. This company is poised to dominate the space for so many reasons, and I am so excited to be on this ride with them. Anyways, everyone, I have so many more updates in the pipeline. Smash that like button, hit the subscribe button. I'd really appreciate it. Thanks so much for the continued support and the kind words in the comment section. This is a great community, and I'm so very thankful. See y'all in the next video. Cheers.